Alright, guys, this is Forex Success Academy. I welcome you guys to this section. You guys are welcome. Good morning, good afternoon, good evening, depending on wherever you're watching from, and then whenever you're watching this video. So, in this video, I'm just gonna show you guys about these two Fibonacci retracement. Some persons they take these two as an indicator. But no, for me, this is just a tool, it's just a material you use to enhance your trading, to help you. Just a kind of a tool you add to your to an analysis to help you get or confirm your entry in the market. You can't just open your app and then enter your market. You have to make some information. So this Fibonacci retracement is a tool you also add to confirm your entry, to make it easy for you to get your entry in the market. So I will show you guys how to use this tool, and then you should know that no strategy in the forex market works every time. No strategy works 100%. So, but it works most of the time, and if you follow the instruction using it, you always be profitable. So, before you use Fibonacci retracement, you should use it on a clear trend. When I say clear trend, I mean um, an uptrend or a downtrend. That is an upward movement of the market or a downward movement of the market. You can't use Fibonacci retracement in a ranging market, or let me say a market that just consolidates. You have to use it in a clear uptrend or clear downtrend. So that is to say, before you make use of this, you must understand market structure. You have to understand market structure to be able to, when you look at your chart, determine this is a clear uptrend. You look at the market, determine that this is a clear downtrend. Then before you make use of this. All right. So let's go and see this. All right. So all right, for those of you using just your smartphone, you find these two below your phone, somewhere you have like a pencil, then you click on it, you see a lot of tools there. So for me, I made it easy for me in my own phone. I have to put those major tools I do use in favorite. So once I open that particular pen, then at the offside, you set a favorite. So you can just go there and add your Fibonacci retracement at your favorite, add your the other tools you normally use often, then add them to your favorite. So for those using the laptop or any system you're using, sorry, this is how it looks like. Yeah, this here, this is Fibonacci retracement. So this is how it looks like. So how to use it? Just pick it up and then place it where you want to place it, and then move. But then before that, you have to set. So at the end of this video, I will show you that how I set my own, so that you can also do the same for us to be made. So what we get to the chart, but before we get to the chart, let's just say, like I said, I use this on a clear trend. So now let's go for that of uptrend. So now it's having all the have a higher highs, higher lows, higher highs, higher lows, just that way. That's what I mean by a clear uptrend. So where's okay, sorry. Where's that of a downtrend? You have lower lows, you have a lower lows, lower highs, lower lows, lower highs. So for those of you who haven't understood market structure yet, you should know that for you to confirm market making lower lows or lower highs, that this current, let's say this current low here have to break this previous low. Now this was the previous low the market break. Then the current low have to be below this previous low. If it's unable to break this previous low, so there will be possible change of market character. That is, this market changing character from either downtrend to uptrend, or from either alternate to consolidates, and then the next movement will just come. The same thing to this side. This current high being able to break this previous high, it was the previous high, and then this being able to break this previous high, and also this current low not going just below this previous low, just the previous low. So when the market get to this point and retesting or retracing, can even retrace up to this point, but it shouldn't like break this previous low. Once it breaks it, there's a possible change on market character. So you shouldn't be looking for more buys there. Instead, you're looking for more sells. Understand? So this, when you talk about clear market structure, this is what it means. So in this kind of situation, that's where you can use your Fibonacci retracement. So let me just show you how to use it. We use our Fibonacci retracement, drawing it from the, okay, let's say you want to go for your buy. You have gotten an uptrend structure of the market. Drawing from the current low, from the previous low to the current high. So this was the previous low, or you can say from the previous low to the next high. So this is the previous low, and then this is the next. You join it also this one, and then that is it. So you can see a lot of numbers here. So for those of you who have no idea, you don't know how to make use of this number. So these numbers you are seeing here, you can see that of 1, you can see 0.7. So the 0.786, you can see 0.7, you can see 0.618, you can see 0.5, and then 0. So all these numbers are constant. But the ones in brackets will always change. Yes, those ones in brackets it always change because okay, now we are under SCU USD. Let's assume that we move over to JPP USD. Now this number is 0.786, 0.7, 0.618, and 0.5. It will still be there, but then the one in bracket will change, showing you the what it have on that particular currency pair. So on 0.5, it's just showing you that on 0.5 is at the zone of 1887.51. I'm coming, I will take it gradually. And then 0.618 is at 1886.17. So in Fibonacci retracement, we pick either 0.5, just like kind of 50% as our entry. Either we pick the 0.5 or 0.618 or 0.7 as your entry. Now I've explained better now. So now let me just do this. Or maybe you can just use this. All right, so let's say we have just a single line like this. Now let me bring this to show you guys something. I told you are drawing from the low to the current high. When you see that the market has started making the retracement, so join to the current high. So yeah, we're actually saying that, or this tool is actually telling us that this market, when as a retracing down, it will give us another spike, or let's say another upward movement when it gets to this zone. Is from here. Okay. When it gets to 0.5, the other spike up from here, or sorry, but also when it gets, when it returns and gets to 0.618, we will have a spike up to the next level, or when it gets from this point to 0.7, we have another spike to the next level. So that's just exactly what this tool is telling us. So now you now be like, okay, so how do I know which zone or which point that the market will get to, and then it will have like the trend will continue moving up, have an impulse move again. So that is a kind of a personal choice you have to make for yourself. For me, I do use just this 0.618. A lot of traders they use 0.5. The reason is because they would like to miss out the market. Yeah, they would like to miss. They would like to miss their entry. But then I'd be like, it's okay. I miss my entry. Then entry at 0.618, and then what if eventually the market, like I told you, no strategy works 100%. What if eventually the market breaks 0.5, even down to 0.618, 0.7, and then hit our stop loss, which we are using 0.7, 0.786 as. What if happens? But if enter at 0.618 and even the market hit the stop loss, you see that it's not the same thing you're losing as of the person who entered at 0.5. Because I have allowed the market to get to my favorite zone, which is 0.618. So I have just told you what I like using or I love using, which is 0.618. That's my zone I love using. And then it's your choice. Maybe it's okay. Now say, okay, let me practice this Fibonacci retracement for demo for like 1 week. And you practice for demo for like 1 week. And you saw that you entering at 0.618, you miss a lot of entries, then you can decide to test another week for 0.5. And if that was fine for you, then that's okay, that's cool. Another thing is this, sometimes you might have a risk management plan. You have told yourself that this is your rule, that you don't risk more than so number of P's, maybe 20 P's or 30 P's in any trade. And you work together with your P's and your loss side. So you have the amount you can afford to do. So if the stop loss amount that this P, like this tool is giving you is more than your rule, remember not to break your rule. Still bring it down, like adjust the stop loss kind of a little to that your point. So that will also have an effect from your entry zone. So if you are working, two things are here now. If you are working not to break your rule, and then you still want to avoid being stopped out, and then at the end of the market still goes towards your direction. So it's better you enter 0.618. And let's say you normally use just 20 pips. And then from 0.618 to 0.786, maybe it's more than 20 pips. You can still decide to adjust your stop loss a little. So, and then allow the market to do what it wants to do. So I think I've explained this part better. That your entry in this two is 0.5, 0.618, 0.7, and our stop loss should be 0.786. This is just showing you where market will have a possible reaction. So it's just for you to know what you think is okay by you. This is a kind of okay. Let me remove all this. I'll make the work. Just hold on. Okay, what happens is just like here is just like let's get let's, all right. Here is just like 100 to 0 at this zone to 0 here. All right. Okay. All right. So here is just like from 100 to 0. And now the market just made a move of 100 to 0. And now at half of it is just like 50. At this zone now, half of it is just like a kind of 50. And then that's why we have our 0.5. I'm talking about using these two Fibonacci. And then at 0.61 is okay. Let me just mark it. We have our 50 at the half, which is here, and then we have at 0.61. It might be a kind of slightly below 50, maybe around here. We have another one here, and then we have our 0.7. We have our 0.7. Yeah. So that kind of the market made an impulse move, and then at the retracement, you're saying that when it gets at half of this impulse, it will spike up again. Or when it gets at below it, which is 0.618, it spike up, or at 0.7, spike up. So I'm just trying to kind of make this more clear to us. So we delete all this and then get straight to the chart. But this video won't be done. So you should also know that when drawing just like the vice versa, we just made an example that of uptrend. When drawing the other way around, I mean drawing for a downtrend, we are drawing from the previous high to the current low. But I think it's better I just show that. It's better I just show you as well. So don't make mistakes. All right. Look at what I'm saying. All right. Sorry. All right. This is that of a downtrend. And you want to draw this Fibonacci retracement. You want to use this tool. You just have to draw from let's say you want to draw from here. This is the previous side. So you are drawing to the current low, which is this. So you can even say just I drew this by myself, not the market now. You can even see maybe this got a retest to that point of 0.5, then you get the reaction and then you close that. So that's just the way it works. So you are drawing from the previous side to the current low for downtrend, and then that of uptrend, you are drawing from the previous low to the current high. So that is how you use this tool. So you should know that you're using this just on your trading review. I don't know about other apps. So I just know about this tool only on trading review. So if you have a trading review, you get a trading review. Watch my other video on how I can how to make use of this tool. I want us to get on chat now so I can make use of this tool. Sorry. All right, this is our chart on SAUSD. So this is the current analysis. I mean, I'm waiting for my trade to be activated. But we are not just here for that for now. So, okay. You should know that in every analysis I'm making, you have to sort of forget to measure trend starting from the bigger time frame. You can use a daily time frame. You know? But then, you can just say later from your 1 hour time frame, know the major trend of the market, and then come down to 1 hour time frame to know the current trend. What I mean by current trend? On the major trend, you can say that okay, let's say USD is currently on sale, it's only sell. Yes, fine. But then on the current trend, you can still see buy opportunity. That's what I mean by current trend. On current trend, you can still buy opportunity. And then enter your buy, start your buy and then leave the market, don't be greedy. But then if you want to get your entry, 15 minutes time frame. So same thing that when you're using this tool, you have to use it because you're using your 4 hours, 1 hour, you might be giving yourself what they call it, a bigger stop loss. If your approach into okay, should probably be above your risk, or let's say your trading risk. So we are getting on to 15 minutes time frame to know how to use this tool. So it allows the chart to look. Okay, so now I'm just gonna look for a clear trend. So I think I'm seeing one here. I'm seeing one here. Okay, let's use this option. For example, this trend here. I look from here, higher highs, higher low, higher highs, higher low. So let's get our two. Let's get our two. Uh, so like you see, places are the previous low. Um, okay, we are placing at our previous low, then to the next high, to the next high. So You can see the price reaction. You can see the price reaction at 0.5. You can see the price reaction at 0.5. Market, or like say price tap at 0.5 and then spike up to the next high that's had. The next high we had. So we are just picking the number you have there. That is 1911.43 as your entry. So that's your entry. And then the number you have here, 1921.92, is your take profit. Now, this take profit is just exactly at the previous high the market made for this test. And of course, you know, in a clear term, the market is supposed to break this structure that is there. So let's say you're opening two positions, you can take your first TP here and then another TP higher above that, or you can use this high that the previous time. Market really is to have some reaction that which will happen. So take a second quick profit at that zone. But then now you picking this trade at 0.5. You're picking this trade at 0.5 and then taking your S like your stop loss at 0.78. That's a peak that's a kind of peak. So all these market goes against you using the loss. So that's to say if you are picking from 0.5, then use a type extra, flowing your trading rate. You're taking 20 pips, it's 20 pips from 0.5. But if not, then you pick at 0.6, I can use the stop loss or still follow your trading rate. So I want the price to come to you. It doesn't come to you, that's fine. There are a lot of entries you can still make. So that is, you can still have that to work there. So let's say you can get that to my content. So I should you have to do that option in the start also. Maybe you can use this. You can use it. Okay. Yes, market gave us a change of character, yeah, and then we went for a down trend. So this is the US, and you know how the movement used to be. How the movement is, guys. So this is the previous high, and then the next low. So you can see at this time now, market tapped at 0.618. Now at 0.618, and probably I think you should even tap at 0.7 because 0.7 has that white line you are seeing there. And during that white line straight this way, you can see market tapped at it, but it didn't get to our stop to 0.78. So that's why I tell you, taking your trade at 0.5 for me, I don't catch it. I don't do that. So just let me to make your decision by practicing on demo and know what works for you. And what I want you to know is learn how to use this tool. So from there, you're taking our profit, basically at the next low, and then if you open two position or more than 2 or 3 or 4, then you can just pick anywhere, maybe this low that is here, because when price got here, it gave us a reaction or anywhere. So you can just keep open and then close when you are satisfied. So that's that for how to use this field. So if you want to still learn more about FIBONACCI, you can even Google it. You can Google it and learn more about it. And sometimes I don't just place my buy limit or sell limit using this tool. What I do is, okay, I've gotten where this tool is telling me to enter. So what I do is, for those of you who have studied candlestick patterns, so what it is that at that zone that market, or we actually the two have told you price will have a reaction at this zone, going up or going down, depending on what you are doing. So you should watch the chart, the candlestick pattern there. You can even set your alarm. You can even set your alert. Then you should not have to set your alarm that when price get at that zone of which the two have given you. You come and watch the candlestick pattern. The candlestick pattern, know the kind of reaction. Are you getting a bullish inversion? Are you getting a bearish inversion? Evening star, morning star. For those of you, I'm not here to just teach you about it. You can just Google it and then read a lot of them. But yeah, just you make use of this candlestick pattern, which is the bullish engulfing and the bearish engulfing, what they call the morning star and the evening star, and then the doggy candle. That's just the middle candle patterns I use, adding more confirmation to my trading for my entry. So I will just wait. Sometimes I not all the time. If I know I'm free, I just set my alert there. Once alert rings me, I come to my tab and watch the reaction of the candle, the market before I enter my buy or sell manually, and then save my take profit and my stop loss, and then watch my choice, give my profit. So that is it. So for now, there won't be anything. I just want to video about this videos. So if you don't understand anything, you can comment video below and then I will clear you. So if you enjoy or you know you learned anything watching this, just give a thumb and then subscribe to my channel, comment your thoughts, what you think, or other parts of the of trade or anything that is still confusing, they are still getting it wrong. So we have to make a review on that, upload, and then so I can understand better. I can you find our number, our WhatsApp number, or link to our group somewhere around this video? Then and join. You can reach us out for clearance. So we also offer mentorship, but then we're taking our last we're taking our last session for this year, starting from the our next class will be starting from the 17th of July, and after that we won't be taking any more section. Like we'll be taking more students until next year. That's February. Yeah. So that's it now. Thank you guys.